Good morning. Today we're bringing you breaking news that's sending shockwaves through the travel industry and affecting thousands of passengers across the country. Spirit Airlines, the ultra-low-cost carrier instantly recognizable by its bright yellow planes and no-frills service, has filed for bankruptcy protection once again. This move comes as the airline faces mounting financial pressures and ongoing challenges in a fiercely competitive market. For many travelers, Spirit has been a go-to option for affordable flights, offering budget-friendly fares to dozens of destinations. The news of bankruptcy is unsettling for those who rely on Spirit to visit family, travel for work, or take vacations without breaking the bank. This development marks a particularly challenging moment for both loyal customers and first-time flyers who count on Spirit for accessible travel options. Many are now left wondering if their upcoming trips will be affected, or if ticket prices across the industry will rise as a result. The airline previously filed for bankruptcy in November 2024, only to emerge from restructuring in March of this year. Despite efforts to stabilize, Spirit has continued to struggle with high operating costs, increased competition from other budget airlines, and fluctuating demand for air travel. Following the announcement, Spirit's stock price plummeted by a staggering 45%, reflecting deep-rooted financial problems and a lack of investor confidence. Analysts point to rising fuel prices, labor costs, and a tough economic climate as key factors behind the airline's ongoing troubles. Despite these setbacks, Spirit Airlines is reassuring customers that flights will continue to operate as scheduled. The company has stated that bookings remain open, and it is committed to honoring existing reservations while working through the bankruptcy process. The airline's leadership is emphasizing their dedication to minimizing disruptions for both passengers and employees. They are actively communicating with staff and customers, promising transparency and support during this uncertain period. The key question remains, what does this mean for passengers and employees? In the coming days, we'll explore the potential implications for travel plans, job security, and the broader airline industry. Stay tuned as we break down what you need to know. When most people hear the word bankruptcy, they often imagine a business shutting its doors for good, employees losing their jobs, and assets being sold off. But in the world of airlines, bankruptcy doesn't always mean closure or the end of the road for a company. In fact, it's often a strategic move designed to help an airline survive turbulent times and come out stronger on the other side. This is especially true in the airline industry, where companies face unique challenges like fluctuating fuel prices, intense competition, and sudden drops in travel demand. Airlines are essential to the global economy, and their operations are deeply interconnected with other industries, so keeping them flying is often a priority. Spirit Airlines, for example, has filed for Chapter 11 bankruptcy. This is a specific type of bankruptcy protection in the United States that allows companies to pause their financial obligations, like paying off certain debts, while they reorganize their business. It's not about giving up. It's about hitting the reset button and creating a plan to get back on track. Many major airlines, including giants like Delta and United, have used Chapter 11 in the past to weather financial storms. The process is designed to give companies a fighting chance to survive, rather than simply liquidating everything and disappearing from the skies. During this period, Spirit can renegotiate leases for aircraft, rework contracts with suppliers, and cut costs that are dragging the company down. This breathing room is crucial for making tough decisions that can help the airline become more efficient and competitive. An independent court oversees the entire reorganization process, making sure that all parties, creditors, employees, and customers, are treated fairly. The court's involvement adds a layer of transparency and accountability, which is important for maintaining trust during uncertain times. Importantly, airlines in Chapter 11 almost always continue to operate flights. They use the cash they bring in from ticket sales to pay for essentials like fuel, employee salaries, and day-to-day operations. For passengers, this often means business as usual, with flights running on schedule and services continuing. Customers can still book tickets, check in for flights, and expect the same level of service. Behind the scenes, however, the airline is working hard to stabilize its finances and reassure travelers that their journeys are safe and secure. The structured bankruptcy process is all about recovery, not closure. Spirit is developing a detailed blueprint to address its financial challenges, streamline operations, and position itself for future growth. This involves tough choices, but it's all aimed at building a stronger, more resilient airline. Ultimately, the goal is to emerge from bankruptcy as a leaner, more efficient company, one that's better equipped to compete in the ever-changing airline market and continue serving passengers for years to come. Spirit Airlines, once known for its ultra-low-cost fares and rapid growth, now finds itself in the midst of a financial crisis that threatens its very survival. The airline is facing a perfect storm of challenges, each compounding the other and making recovery increasingly difficult. Passenger numbers have dwindled at airports across the country, with Spirit's check-in counters and boarding gates often eerily quiet. This drop in demand has led to fewer flights and less revenue, putting even more pressure on the airline's already thin margins. At the same time, the cost of doing business has soared. Jet fuel prices have spiked, maintenance expenses are up, and labor costs continue to rise as the industry faces worker shortages and demands for higher wages. These rising costs have strained Spirit's finances to the breaking point. A major setback came when Spirit was forced to ground a significant portion of its fleet due to engine flaws. This not only disrupted daily operations, but also led to millions in lost revenue and unexpected repair bills, further destabilizing the company's financial position. Hopes for a lifeline were dashed when a proposed merger with JetBlue was blocked by regulators. Without the merger, Spirit lost out on the chance to gain financial stability and scale, leaving it exposed in an increasingly competitive market. Meanwhile, travelers' preferences are shifting. More passengers are seeking comfort, flexibility, and reliability, qualities that Spirit's no-frills, bare-bones model struggles to deliver. This shift has made it harder for Spirit to attract and retain customers. The domestic airline market is also oversaturated, with too many carriers chasing too few passengers. This has sparked a fierce price war, forcing airlines like Spirit to slash fares just to stay in the game, eroding profits and creating a race to the bottom. All these factors, rising costs, operational setbacks, failed mergers, changing customer expectations, and brutal competition, have combined to push Spirit Airlines to the brink, ultimately leading to its drastic decision to file for bankruptcy protection in hopes of restructuring and surviving in a turbulent industry. Is it safe to fly with Spirit? The airline assures that operations will continue as usual. Existing tickets and travel credits remain valid, with Spirit aiming to prevent customer disruption. Loyalty programs are protected, allowing passengers to earn and redeem points. However, travelers should be proactive, using credit cards for new bookings for added protection. Monitoring flight status is crucial, as schedule changes may occur during restructuring. Spirit's commitment is to maintain customer trust and smooth operations during this period. Spirit's bankruptcy announcement creates anxiety for its employees. The company assures that wages will be paid on time, prioritizing employee stability. This commitment aims to maintain safety and service standards during the transition. CEO Dave Davis emphasizes the importance of employee dedication for the airline's future. However, restructuring may lead to changes in the workforce, with potential reductions in staff. The focus is on operational stability, but the airline's future will likely look different. Unions representing Spirit's employees offer a cautious perspective on the bankruptcy. The process is expected to be more challenging than the previous one, urging workers to prepare. Unions advise financial prudence as restructuring often involves tough negotiations. The reality points to a shrinking workforce, with voluntary leaves and potential furloughs. Unions play a critical role in supporting members and negotiating terms during this period. Solidarity and staying informed are emphasized as key strategies for employees. Spirit Airlines' history is marked by resilience and struggle. Starting as a trucking company in 1964, it ventured into aviation in the 1980s. The airline adopted the Spirit name in 1992, focusing on ultra-low-cost flights. Its a la carte model offered low base fares, charging extra for additional services. This approach fueled rapid growth, expanding its network across the Americas. However, financial turbulence is not new, with a recent bankruptcy in late 2024. The quick return to bankruptcy court highlights deeper issues needing resolution. Spirit's troubles reflect broader challenges for ultra-low-cost carriers. The travel market has shifted, with travelers valuing comfort and reliability. This trend benefits traditional carriers, putting budget airlines at a disadvantage. The domestic market is fiercely competitive, with legacy carriers offering competitive fares. This price war erodes the advantage of ultra-low-cost carriers, squeezing profits. Budget airlines are rethinking strategies, seeking new routes to capture market share. Spirit's struggles serve as a cautionary tale for the sector, testing the low-cost model. Spirit's path forward involves significant restructuring. The plan includes shrinking the flight network and reducing the fleet size. Customers can expect changes, with some routes cut and others reduced. The goal is to emerge as a smaller, more profitable airline. Spirit aims to maintain low fares on a focused network, offering stability for employees and customers. The process will take time, with no guarantees, but the airline is committed to survival. Passengers should stay informed and flexible as Spirit navigates this turbulent period.